Hello everyone, welcome to the stock trading tutor channel. In this video, we'll be looking at a stochastic oscillator. So what is a stochastic oscillator? So this is a momentum indicator comparing the particular closing price of a security to a range of its prices over a certain period of time. The sensitivity of the oscillator to market movements is reducible by adjusting that time period or by taking a moving average of the result. So this is used to generate overbought and oversold trading signals utilizing a 0 to 100 bounded range of values. So here is an example of how that would look. So this is the candlestick chart of the Nifty 50, and below this we have the stochastic oscillator. So as we can see, it has its stochastic oscillator indicator, and here the shaded purple area is the neutral region, and it has the boundaries of it are the 20 mark and the 80 mark, and the overall it ranges from 0 to 100 here. Let me mark that. So it ranges from 0 to 100. It starts here and it ranges till the 100. So when it crosses the above 80, it shows overbought signals, and when it crosses below 20, you can see these are oversold signals. So this is the stochastic oscillator. When you apply it on a chart, this is what it will look like. So to see some more of it, how the stochastic oscillator, the specific indicator, how it is calculated, we can look at the formula here. So here we have the formula, which is given by percentage K is equal to C minus L14 divided by H14 minus L14 multiplied by 100. So to explain this formula, this C here is the most recent closing price, and this L14 is the lowest price traded in the previous 14 trading sessions. So this number of trading sessions can be manipulated by the individual themselves. You can go and select a specific time frame if that is what you wish. The standard is generally 14, however, so that's why we have used 14 here. If you have any specific trading time periods and you want to see a stochastic oscillator for a different time period, you can change it through the settings. And then here we have H14, which is the highest price traded during the same 14-day period. Again, similarly, you can change the time frame. And L14 again is the lowest price. And this percentage K represents the stochastic oscillator. So this value is plotted all over the indicator and shows in the chart form. So let's apply this directly on this chart. So if we see the chart here, and in the last 14 days, 14 periods, so this is a daily chart, so each candlestick represents one day. So here we have, in this specific chart, we have the this is the 14 period time frame, so from here till over here. So here we have the lowest price, this line here. This is the lowest price, that is 11,000. And the highest price, let's mark it here, and this is, let's say, around 11,700. So for this calculation, we'll keep it a rounded numbers. So say this is 11,700. And here is the 14-day period, and we'll be calculating. The closing price is here, which is given 11,110. So this we'll be using. This green line marks the closing price. So if we apply these values on the indicator, we'll see this. So as we can see, I've entered the values here. The closing price, which is 11,110. The lowest price traded in the previous trading sessions, which is 11,000. Then the highest price, we have 11,700 minus the 11,000 value. So when we apply it, it'll give the 15.71 value, which is under 20. So which this indicates the oversold value. So here in the chart itself, we can also see it is in the 15 range. This blue line is at 15.61. So this is pretty similar to the answer which we have gotten. Since we have rounded out the numbers, the decimal points are a little different. But overall, as we can see, this blue line is the stochastic indicator, and we have calculated the value and how for this specific point, this is the value, that is 15.7 or 6 in that range. So that is how the stochastic oscillator is plotted on the chart. So the overbought and the oversold levels. So the stochastic oscillator is range bound, as we have discussed. It is always between the 0 to 100. So this is a useful indicator for overbought and oversold. So readings over 80, as this in line here, as we can see, this line is the overbought line. This is 80. And this any whenever the stochastic oscillator crosses above the 80 line, it indicates that the current situation stock price is overbought. And when it is under 20, as here we can see, so this indicates oversold. So when the stochastic indicator crosses the 20 line and goes below it, it shows that the stock price is currently being oversold. So stochastic oscillators in general are sensitive to momentum rather than absolute price. So the stochastic oscillator measures the level of the close relative to the high-low range over a given period of time. As I've shown you how the value is calculated, the closing price minus the lowest price of that specific time period, and then this is divided by the difference between the highest price and the lowest price. So this percentage K, that is the value of the stochastic indicator, is referred to as the slow stochastic indicator. The fast stochastic indicator is taken as percentage D, which is the 3-period moving average of percentage K. So the 3-period moving average of percentage K. So that is how we can see that it is sensitive to momentum. So the general theory serving as the foundation for this indicator is that in a market trending upwards, the prices will close near the high, and in a market trending downward, the prices will close near the low. So the transaction signals are created when the percentage K crosses through a 3-period moving average, which is called the percentage D. Now let's look at it in the chart itself. So this blue line is the percentage K and this red line is the percentage T. It's the 3-period moving average of this percentage K. So when this crosses here, as we can see it has crossed here, this is a bearish signal, this line. When the percentage K line, that is the blue line, it crosses above the red line, this indicates a buy signal, and this indicates a sell signal when it goes below the signal line, that is the red line. So that's how the stochastic indicator is used for generating the transaction signals. Now let's see the technical indicators which you can use to pair along with the stochastic oscillator. So moving average crossovers can be used as a complement to the crossover trading signals given by the stochastic oscillator. So a bullish crossover, which occurs when a short-term moving average crosses from below to above a long-term moving average, confirms an upward trend. So along with the stochastic chart, you can apply moving averages, which will apply on top of this candlestick chart. So this will give additional signal confirmation that the market is moving in a specific bullish or a bearish trend. So this will support your trading signals. When you want extra confirmation, whether you are doubtful and you don't want to rely specifically on one indicator itself, because having an extra confirmation means you can make safe trades and with less risk. Now, other momentum indicators such as relative strength index or the moving average convergence divergence can also be used to complement the stochastic oscillator. Either of these commonly used momentum indicators can be looked at for signals that are in agreement with the stochastic oscillator to confirm its indication. So similarly, along with the stochastic oscillator, you can also use the relative strength index, or you can use the MACD, that is moving average convergence divergence. In this example, we have the stochastic oscillator and the moving average convergence divergence in this candlestick chart. So when both of them are indicating an upward bullish trend or a downward bearish trend, then investing or putting your money on the transaction signals will give you a better result, and it's more confirmed and shows that it's less risky. So that's how you can use the stochastic oscillator for trading in the stock market. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel.